So the domino has just fallen. The Federal Reserve has decided to raise interest rates again, which is going to cause even more of a banking crisis. Now, despite fears of a recession and a possible banking crisis, the Federal Reserve decided to raise rates by another 25 basis points, with the expectation that rates will pause at their current levels. However, the current rate is 5%. We now have seen a 5% interest rate, the federal funds rate of 5%. This is the first time we've seen that since 2007. Obviously, I don't need to tell you how bad things were in 2007, but things are not looking good right now either. And the major concern amongst economists is the banking industry. Let me just put it to you this way. Banks were not anticipating the federal funds rate being at 5%. Okay? When the FOMC had a meeting, this was, I believe, December 15th, 2021, they projected that the federal funds rate for 2023 would be less than 2.5%. It is currently 5%. It's double what they were projecting. Now, some worry that the rise in interest rates are hurting those regional banks that are seeing rates extend beyond what they had anticipated. Keep in mind that banks were expecting a federal funds rate of under 2.5%. Even those that were very cautious, even if they were 3 or 4%, which would be just very cautious at 4%, it's now at 5%. This is part of the problem. Now, according to a financial economist from Boston College, he's had this to say. He says, each incremental interest rate hike beyond what they had anticipated is going to exacerbate the banking problem significantly. Once that trust starts to erode, then you have a domino effect. And we're on the brink right now of a major domino effect in the regional banks. I'm telling you, this is happening. It's not a matter of if, it's a matter of when. Banks are going to collapse. And I'm not talking about the big guys. I'm not talking about your JP Morgans. Okay? I'm not talking about your Bank of Americas, Wells Fargo. I'm not talking about them. I'm talking about your regional banks, your smaller banks. They're going to collapse. Now, here's what most people don't realize. Banks who gave out cheap loans in 2020, 2021, even early in 2022, they're seeing major losses. And until borrowers start coming back and getting new loans, this is not going to correct itself. According to multiple people that I've talked to, this is a problem that is going to persist until the Federal Reserve decides to flip the switch in lower rates. But right now, according to the statement from the Federal Reserve Chairman Jerome Powell, a pause is likely in order. So we're not going to see a rate hike, but we're not going to see decreases either, at least not for the foreseeable future. But again, what are we going to do over this, these next few months, right? The next 7 months, 8 months, what do we do? Well, I can tell you right now, just be prepared. So this is exactly what happened with First Republic. First Republic, but before they were bought by JP Morgan, this was part of the issue. They gave off a lot of loans, and those loans were very cheap interest. They weren't making a lot of money off of them. Well, guess what? They're making absolutely no money right now. Okay? But here's what Senator Elizabeth Warren had to say. And this, I think, is very important to understand because this has to do with JP Morgan, which is the biggest bank. Senator Elizabeth Warren said, "What happened here is because a bank was underregulated and started to fail. The federal government has helped JP Morgan Chase get even bigger. It may look good today while everything's flying high, but ultimately, if one of those giant banks, JP Morgan Chase, starts to stumble, the American taxpayers are the ones who will be on the line." And again, this is part of the problem. It's always us. We are bailing out the big banks. We are bailing out the airlines, right? We are bailing out other people. But why? Now, the bigger banks can take on some bad assets. And if, again, they're large enough to absorb some of these bad assets without feeling the pain initially. Keyword, initially. But after too much bad assets, they will start to feel the pain. And like Senator Elizabeth Warren said, the taxpayers will be the ones footing the bill. And I want to be very clear on this. Even though the shareholders are losing their investment, in First Republic, it's not necessarily the taxpayers. But guess what happens when more banks begin to collapse? The taxpayers are going to be the ones feeling the pain. We might not be the ones providing the bailout, but I guarantee you we're going to feel the pain. This is how the problems are getting moved along. Everybody thinks they understand the banks, where they're headed. They understand inflation, where it's going. They understand the U.S. economy and when we will end up in a recession. Everybody says, oh, I'm an expert. I know this stuff. Don't worry, everything's good. Or like, Jamie Dimon from JP Morgan said just the other day that the banking industry is very, very sound. Can you really believe somebody like that when they have an ulterior motive? Well, here's the truth. The president has no clue what's going to happen. He can have his influence, but he has no idea if the U.S. is going to end up in a recession. He doesn't know what inflation is going to be, and he does not know when or if we have a banking crisis. He doesn't know. The Federal Reserve has no clue. Federal Reserve Chairman, again, no clue. CEOs of banks and Fortune 500 companies, again, have no clue what they're doing. Well, what about somebody like me? Again, no clue. I have no clue what's going to happen. I don't know when we're going to end up in a recession. I don't know what inflation is going to be. I don't know if and when the banking crisis is going to happen. My expectation is it is going to happen. Now, I come on here every single day in and day out, and a lot of people say I'm a financial expert, and I know exactly what's going to happen. The truth is, I don't. I come on here and I create videos. I spend, hours and hours and hours putting together videos like this one. And right now there's just too many variables. And nobody controls every single one of these variables, so they cannot tell us if and when we see an economic collapse, if and when banking just falls apart, when this recession hits and when it could be over, or what happens with inflation. We don't know. So the expectation is that an economic collapse could happen for many different reasons. And the honest truth is nobody knows what it's going to be. This is why I'm pushing you guys to be ready and prepare for such an event, because we do not know. All we know as of today is the domino has just fallen. The American people will be the ones footing the bill. That's what we know. In some way, we will pay. So, be ready, and just understand the best way to be ready as of right now is to remain educated. Stay up to date on all the latest news. And the one thing that you can do right now is click that subscribe button so you never miss an update. But that is what I got for you guys today. Again, thank you guys for watching. Hopefully you enjoyed today's video. And if you did, again, click that subscribe button, and I'll see you guys on the next one.